Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Monday market webcast. Okay, daily chart. We've rolled into the June contract now, and you can see here's your 200-day exponential moving average, which is ultimately held in this range. And all I've been doing for these subscribers is I just extend this box out every day. Because until we get out of this box, and look, I get that it's a big box, but it's a pretty volatile market. 44.20 down to the current lows, basically 41.01. And we are playing on a very big playing field, but ultimately, it's still a consolidation tape. Now, the bears have an advantage. Why? What's the one delineator we always have talked about for going on 6, 7, 8 years here about whether we are buy dips or sell rallies? That's the green line here, the 20-day simple moving average, the middle Bollinger Band, right? They've had two looks. Back on March the 3rd and on Friday. Both times here on the continuation chart, they have been resistance. And as long as that 20-day simple moving average continues to act as resistance, until it's converted, we are in a sell rallies tape. So the highs last night, where did they come in? It was like, 45. 44.75. They've backed that off. They did that at about 6 o'clock this morning. And it still continues to be, don't get it twisted. It is not a super technical market. It's still mostly, it's still 90% news driven. It's news driven. It's psychological. It has very little to do with actual technicals right now. And it's extremely volatile. It's a market where you've got to respect your risk. You got to use you got to have a risk plan with hard stops. Don't start adding to losers, doing things like that, because you can have a 5-handle move that can get away from you very quickly and be a 50-handle move. And that can really do a lot of damage in this tape. So, for us, it's been a great week, great month, the whole thing. We're just doing our thing. But we're flexible enough to say, look, okay, this wants to go the other way. Fine, we'll go the other way. Don't get ideological in this tape. Don't get dug in. Don't go in with a bunch of assumptions and say, well, there's war on. And have you seen, inflation? Have you seen this? If you do that stuff, then days like this, you're going to get hammered. Because you're just going to, why aren't we making a lower low? Because we're not. So, during the rippers, and it's a bear market, during the rippers, you can be long or you can stand aside. Don't fight it short. When it exhausts, go from there. And that's all we're trying to do. We're not trying to catch tops and trying to catch bottoms. This thing wants you to throw darts at it. Don't throw darts. Catch the meat of these moves, and there's more than enough handles to go around. And then focus on keeping it. So heading into today, you've got volume weighted average price, basically 42.20. The hourly mid-band, basically 42.20. Proprietary moving average is at 22, going on 23. Your daily pivot's 42.37. Let's go to the hourly chart. You can see you got a lot going on there. The new weekly pivot is 42.1792 on the June contract. So everything is really just kind of jammed in and around, let's call it 42.20. This area is going to have to resolve itself one way or the other. Look, if it stays like this, on this hard breakdown during the 7 o'clock hour, if 17.18 holds, if weekly pivot and you see the hourly mid-band coming down to meet it, if this area holds, you want to be short below this area, you want to be long above, okay? That's your, it's a very obvious bull bear line heading into this morning. That's going to be a big key to the day. So let's watch 42.20 and we will go from there. All right. Everybody have a fantastic day. Be safe, be healthy, take care, trade them well. Talk to you tomorrow.